Many local newspapers have struggled to survive in the digital age with current events just a click away. But for some publications, it is not the internet that's killing them. A recent article in The Atlantic takes a closer look at Alden Global Capital. It's a New York-based hedge fund. And over the years, it has become the second largest newspaper publisher in the U.S. Some have called its business model vulture capitalism because of the cuts it has made to staff and resources at the papers that it purchases. So the author of that piece is McKay Coppin. He joins us now to dig a little deeper into what some see as the dismantling of local newspapers. So fascinating, fascinating article, and actually vulture is not the right word to use because vultures pick at carcasses. What your article talks about are actually functioning newspapers that are turning a profit that this hedge fund goes after. And you start with a really great example of the Chicago Tribune. You describe the Tribune building, the structure that was built, Gothic-looking structure with weight to it, and the message that the original Tribune publishers wanted to send with this building versus the bare bones operation that we see now. Can you talk a little bit about that and why the Chicago Tribune is such a good example of what happens when Alden moves in?
Yeah, the Chicago Tribune is one of the most storied publications in the United States. This is a newspaper that endorsed Abraham Lincoln, broke the news of the Treaty of Versailles, has won dozens of Pulitzer Prizes. And like you said, for a long time, it was headquartered in this towering monument to journalism in downtown Chicago, the Tribune Tower. But earlier this year, the Chicago Tribune was purchased by Alden Global Capital, and it is now, the newspaper is based in a small kind of cement Chipotle-sized room near the printing press, where they don't have enough desks for all the reporters. A lot of them are still working from home. And the staff has been gutted. Shortly after Alden acquired the paper, they offered an aggressive round of buyouts to the staff, and 1/4 of the newsroom left. And that, just to give you an idea of this, 20 years ago, the Chicago Tribune had 700 people working in its newsroom. Today, it's somewhere between 70 and 100.
So, McKay, when Alden recently expressed interest in purchasing the Baltimore Sun, another storied, legendary newspaper, local journalists fought against it. What was the outcome of that battle?
Yeah, when Alden first bought a stake in the Baltimore Sun's parent company, Baltimore Sun journalists had a short window to basically try to convince the board not to sell to Alden. And so what they did was they launched an aggressive PR campaign. They rallied local celebrities and local politicians. They held actual rallies. They ran editorials. The campaign was called Save Our Sun. And the idea was to basically instill a sense of urgency in their city of what Alden Capital could do to this longtime staple of their community. And they had some success. They actually did find a local philanthropist who emerged as a potential buyer to try to buy the paper from Alden. Alden, basically in the account of this philanthropist, torpedoed the deal. And at the end of the day, Alden ended up acquiring the paper. And I think that story is important for a couple reasons. One is that it is very hard for journalists in these newsrooms to explain to the rest of the country how important it is to try to preserve these institutions, right? A lot of people, I think, assume that the local news business is just naturally dying because newspapers fail to adapt to the internet, and Craigslist killed the classified section, and all these stories we've been hearing for years and years. And a lot of that is true, but it's also true that what this hedge fund is doing is figuring out how to make an enormous profit by deliberately driving these newspapers into the ground. Year after year, they're cutting their newsrooms. One analysis found that they're cutting their newsrooms at twice the rate of their competitors in the industry. They're taking cash out of the newspapers and, according to 2018 court filings, diverting them to other investments. And so, when we talk about a local newsroom dying, it's not just the journalists who are suffering, it's everybody in the community, because when you lose a newspaper like this, you lose a crucial layer of accountability for the people in power.
So you give some really good examples of the way a community is impacted when they lose a newspaper, but I just want to dig in a little bit more to the business model, because as I was reading the article, I kept on thinking to myself, and I'm clearly not a business person, this seems like the dumbest business model. Why would you take a profitable business and then deliberately drive it into the ground, raise the subscription prices, gut the staff so that the product is no longer worth the price of the subscription, and then you lose support? It didn't make any sense to me. It's like a race to the bottom. But it's actually an incredibly profitable thing to do. Can you, I don't know if you could do it as short as time possible, sort of give us the equation as to why this works?
The key difference is between short-term profits and long-term sustainability, right? What Alden Capital is doing quite clearly is maximizing their short-term profits with these newspapers by cutting the staff, selling the real estate, increasing subscription prices, in some cases outsourcing things like layout design to the Philippines where they can charge much lower rates. All of this might reduce the long-term viability of the newspaper, but for Alden and its investors to make money, they don't need these newspapers to be sustainable in the long term. All they need to do is take enough cash out of the entity that it's more than they put into it. And so it will show up on their ledger as a winning investment. And this is something Alden has done very brazenly, but there's a larger conversation to be had in this industry about whether private equity and hedge funds have a place in local journalism, because their model is not always to fix up these businesses and sell them at a profit. In the case of Alden, a lot of critics would say that their goal is actually just to take as much cash as they can until the papers fold, and then they can move on to other investments.
So McKay, Heath Freeman, who's the president of Alden Global Capital, actually granted you a very rare interview for this article. I want to hear from you what he had to say about the company's managing style, and if he considered the very important detail of what it means for cities and communities when local journalism is snuffed out. I think that people in this discussion, and every day a friend of mine will send me an article, public trust in the media at an all-time low. People hate reporters and stop dividing the country. I get a lot of those text messages from people that I have known throughout the course of my life, and but oftentimes they're directing their ire and their anger at perhaps cable news or talk radio without really thinking about these local newspapers that, for example, my parents who are in their 70s rely on way more than they rely on even national news networks to figure out what's going on in the community and what's happening in our town. Did he address that?
Not really. I mean, so it's important to note that local newspapers, if you look at those surveys you mentioned, are consistently among the most trusted news entities in the business, right? You're right that the trust in media overall is low, but if you break it down into various types of media, people will often say, yeah, I don't like the media in general, but I more or less trust my local newspaper. So when you lose those local newspapers, it has a trickle-down effect for the whole industry. The other thing is that there's a whole body of research that finds that when a local newspaper disappears, it tends to correspond with lower voter turnout, increased polarization. There is even some evidence that city budgets increase because there's less accountability, more corruption, more dysfunction at local government. When I talked to Heath Freeman, he didn't seem especially interested in those things. In fact, he didn't really seem interested in journalism at all. I kind of expected going into my conversation with him that he would sort of say the things you're supposed to say if you're somebody in his position, which is to say, all these cuts and buyouts and layoffs are tragic, but they're necessary. And I have great respect for journalists and the work they do. And, I'm interested in the long-term future of these newspapers. There was very little of that. He actually seemed to regard Alden's history of cost cutting as kind of a badge of honor. It is something that distinguishes him from past generations of newspaper owners whom he believes didn't have it in them to make the tough choices and make the cuts necessary. And I think that this is the key category error that a lot of people make when they talk about hedge funds like Alden. They are ultimately not newspaper businesses. They're not media companies, right? They are in this to maximize profits for their investors by whatever means necessary. And so if you are somebody who is concerned about your local newspaper or local journalism in general, I think we need to have a more serious conversation and more scrutiny about who is owning these newspapers, who's buying them, and whether that's good for the long-term health of not just this industry, but democracy in general.
So
really
true.
important reporting. As always, McKay Coppin's writing in the pages of The Atlantic. Thank you for sharing that with us. We appreciate it.
Thank you.